Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one broker linking you to the global markets to access various financial assets. Now, beginning with fundamental analysis, which we constantly define and redefine as the study of economic and geopolitical forces moving the financial market, we have had a myriad of high impact news, or what we have referred from the definition of fundamental analysis as economic forces being printed out. This is on Monday, and all eyes set on the ISM manufacturing PMI, which is the Institute for Supply Management Manufacturing Purchasing Managers Index, which is simply a survey of captains of industry in the manufacturing sector in the United States, where they give their views on data they have collected in respect to their industry in the previous month. And it is an inflation indicator, which previous was at 50.9. The consensus was at 50.5, and the actual one that came out, we see right here, the consensus was at 50.5 and the actual one was at 50.3. So we see quite a decrease, lower than expected, with negative 0.2. Of course, this weakens the dollar to a certain extent, and that would lead us to our snippet for today, which is focus on gold and indices, and we take a leap into some currencies, not only regarding this high impact news which came out lower than expected in the US, but also understanding the geopolitical forces in regards to Donald Trump's tariffs. And from that, we will see how that is interpreted on the chart. Traders and investors, don't get mixed up. Let me repeat it to make it simple. We are looking into the movement of assets in regards to these economic forces, and our focus is going to be on gold, indices, which is basket of stocks, and some currencies which are affected by this high impact news, which is the Institute for Supply and Management Manufacturing Managers Index, which we have said is an inflation data. And we are also being informed by the previous geopolitical forces in regards to Donald Trump tariff, which is imposition of tax on imports brought to the United States by her business partners. Now, before we proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video at your own free time, at your own convenience, and get to relearn. And you can find this YouTube video in our YouTube channel at HFM Kenya. Kindly like, subscribe, click on the notification button, and share so that this content can reach more and more people who will get to benefit from the knowledge that we attempt to explain on that YouTube channel. Also like, so that it improves on our algorithms, and it is our commitment to you that we are going to be making content that is not only timely but informational. Now, with that said, let's proceed to the chart. Now, we have in the past mentioned that gold is classified under commodities. Commodities is a class of the assets that we get to speculate as derivatives in the financial markets, and we are able to make possible profit when the assets go in our speculated direction. Now, gold is to be understood from an aspect of economics and also geopolitical forces. Economics from the United States, because the up, notation of gold is XAU USD, XAU to abbreviate gold, and US dollar to abbreviate the US dollar. So economics from the US dollar largely affect the movement of gold. And yesterday we had negative ISM manufacturers PMI, which made gold increase in its overall value, and we see it close with a bullish Marabuzu candle, indicating that we may be changing this short-term retracement to proceed with the long-term bullish trend that we have been enjoying from much time of previous year and the year before that, and the last quarter of the year before that. Now, having understood this, it is not a coincidence that we get to react from this area of interest. This is the nexus, or where we get to see the marriage between technical analysis and fundamental analysis. So getting long for these positions would be considered risk-off approach, to mean would anticipate for price to keep proceeding to print price on the upside. This is also amid the geopolitical forces that we have mentioned in the beginning of this series of the Daily Morning Market Call, where we have reminded ourselves of the geopolitical tensions. Now, tension tends to affect gold in a much more perceived way than economic forces. How is this? Because gold acts as a safe haven where investors and traders tend to shield themselves from tensions in the global space, which might not really necessarily favor other investments that they have. Which investments are these? Other asset classes like indices. And that's why we see gold attempting to start printing on the upside for us to continue with the long position. If we get to look at US 500, 100 or NASDAQ in this instance, we tend to see that we are proceeding with the bearish momentum that was created after the breaking of the 21,012.52 area of interest. Now, price is printing currently at 2,500 thereabout, and price is proceeding to print on the downside. I remember yesterday or the last week we said if this bearish momentum continued, we would possibly see it attempt to reach the 19,966 area of interest, and this is because of the tensions in the world which are brought about by the tariffs. We see investors taking their money away from other investment portfolios. In this regard, US 100, which is an indices for US tech 100 tech companies, which have been put in one basket to give us an overall view of that sector of the economy. Now, if this proceeds, we will keep on being short. We see it broke below this area, retested it, and price continued to print on the downside. This is possibly going to be the likely scenario. If we look at S&P 500, we see that price is also printing on the downside, to indicate that we are possibly getting to print price on the downside to encourage investors and traders to get in for short positions. Now, if we look at certain currencies, for instance, US, Euro USD, we see that the optimism brought about by the ongoing talks in the European Leadership Summit is giving investors some level of confidence. However, this confidence is to be approached curiously, because the confidence is supposed to strengthen the euro, because we have so much happening in that part of the world. The first concern, of course, is the Eastern Europe conflict, which is tending to affect the euro negatively, giving a little bit much of favor to the United States dollar. However, the talks which are going on, which underwent during this previous weekend, gives optimism to investors in euro to keep having faith in euro as a medium of exchange, which will have perceived strength over it. And this is because we see other leaders in European countries attempting to support the Ukraine crisis, where we see Russia invading Ukraine. We would of course approach this with a risk on approach. We would want to see it, how it reacts from this area of interest at 1.05 385. When it closes above, we would get much more confidence to keep longing until we reach above the 1.06435 area of interest. However, observe risk management cautiously when getting for long in this particular asset, which is a currency, Euro USD, which is a major currency, because overall we are in a bearish market structure where shorts would be seen much more of a risk of approach, or much more safer. US oil, which has been quite an interesting asset to check, to look at. When you visit the previous videos that we have done over the weeks, we called it out from up here at when it was trading at $80.92 per barrel. Now we see we are attempting to reach the 67.36, and fundamentally we said this is because of the mitigation of the new administration in the United States to have the prices of oil reduce globally, so that belligerent Russia can have less money or run low on military budget, which will reduce the chances of war escalation. Geopolitical forces happening there. However, in Germany, interestingly, these particular indices, which is 40 companies in Germany, is not printing like we have seen the indices or baskets of stocks in US. We printed with a bullish candle with a wick on the top yesterday. This is on the daily time frame, and we broke the all-time high at 22,934 thereabout, and price is attempting to retrace and proceed with the overall trend. Remember guys, we called it out from down here when it retested this area of interest, and fundamentally speaking, we alluded to this action that has happened from last week due to the election which happened in Germany. Remember, this is German 40, which directly is inclined to the policies of the government in the German state, and we saw a new government taking charge and power. And when it comes to companies and the state or government, we only look majorly, not to use the word only, majorly look at the regulation and tax policies. And if these regulation and tax policies are favorable to those particular stocks or basket of stock in context to that country, of course it will drive optimism, which will keep building up momentum for the bullish market. If this is your first time interacting with the financial markets and you would want to learn more, kindly I would give a call to action to you by to visit hfm.com, attempt to register for an account, and you will fill in your details. Then our experts will get in touch with you to help you proceed forward. This by any chance is not financial advice. This is purely meant for educational purposes. It is therefore important to do your due diligence and remember to observe risk management. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Take care and God bless you all.